Market fundamentals, scale of ownership. This article looks at the outcomes of a 1990 study of landlords and rental properties in NSW, undertaken by the Department of Housing in that state, and at the results of similar investigations in other states. The NSW research demonstrated that most landlords, 83%, were owners of only one property and that this group held more than half of the supply of private rental properties. It was found that landlords were predominantly from the older age brackets and had higher income levels than the general population. Most property investors, nearly 70%, were from three occupational categories: professionals, business and financial services, or property management and development. For the majority of investors, long-term financial security and capital gains were the most critical considerations. Other research carried out in Melbourne confirmed that most landlords were small-time investors with one or two properties, but that large-scale investors played a significant part in the real estate market. More than 90% of the Melbourne respondents did not regard themselves as full-time investors, as most of their income came from other avenues such as small businesses or wages. A further survey of the Melbourne rental market provided a useful means of describing property owners as set out below. Small scale, 1 to 5 properties. This group makes up 70% of landlords by number, but they own just 17% of the rental stock, a marked reduction compared with smaller investors in Sydney, who control 54%. This variation is probably related to interstate differences in the application of land tax policies. Medium scale, 6 to 20 properties. Represented mainly by more financially sophisticated, high-income individuals like doctors and lawyers seeking capital gains and looking to offset high marginal tax rates. Large scale, more than 21 properties. Mainly property developers and major financial institutions. However, some of these owners are moving away from residential real estate because of management difficulties and diminishing returns. Other evidence is emerging that investor profiles have changed significantly over the years, as the proportion of investors increases at the expense of owner-occupiers. This is particularly true of some recent medium to high-density developments offered to the market. My knowledge tips. 1. For the majority of investors, long-term financial security and capital gains were the most critical considerations. 2. Landlords were predominantly from the older age brackets and had higher income levels than the general population. 3. In an NSW study, most property investors, nearly 70%, came from three occupational categories: professionals, business and financial services, or property management and development. 4. There is evidence in relation to purchases of real estate that the proportion of investors is increasing at the expense of owner-occupier numbers.